Hi, everyone, and welcome to our webinar that's titled How to Leverage Your Corporate Credit Card as a Cash Flow Tool for Your Business. My name is Tanya Bharadwaj. I drive content and thought leadership at InstaReM. Just a little bit about the topic to give you a bit of context on why we thought this would be a meaningful conversation to have. I think managing cash flow has been a perennial sort of challenge for small businesses, but I'm sure most of you will agree with me that, cash flow has really proven to be king, so to speak, more so in a time like this when money is tighter than usual and businesses are really facing a disruption in cash flow. So we thought that it would be a good idea to talk to you about, how you and your business can unlock cash flow in areas where you previously could not, or, perhaps didn't even give it a thought. So to talk us through how a corporate credit card can really be an essential asset during a crisis like the one that we find ourselves in, we've got three veterans who are joining in today. At the outset, I must say that unfortunately one of our panelists, had a sort of pressing personal engagement because of which he couldn't make it. And so I do apologize sincerely for the sort of change in lineup that we've had, but I promise you this is going to be worth your while and you're definitely going to get, some actionable ideas and insights over the course of the next hour or so. So let's get straight to it. And let me quickly introduce you to our speakers. And Adrian seems to have disappeared. I hope he's going to be making his way back soon. But let me start. Let me start with Vikram. We've got Vikram Shetri. Vikram leads B2B partnerships at Visa for the APAC region.
Hi.
He's particularly focused on partnerships with B2B focused fintechs as well as technology firms. So Vikram, thanks so much for taking the time out.
My pleasure. Yeah.
Next up is Sanjeev. Sanjeev is the global head of commercial payments at NIAM. He's really focused on delivering value to small and medium-sized businesses through InstaReM's gamut of offerings. And, you can really look forward to sort of a deep dive from Sanjeev on, this particular solution that we've been talking about. I do hope, I don't know, Adrian, can you hear me? Okay, looks like we've lost Adrian. I'm sure he's going to find his way back. Adrian heads up commercial cards and strategic partnerships at Citibank, and we're going to have him back with us really soon. So like I said, you can look forward to some actionable ideas from this discussion. At the same time, I also urge you to put forth your questions to our panelists in the Q&A window. I do hope you can hear us fine. If at all there is any issue, do just leave me a comment in the chat box and I'll make sure that I fix it as soon as I can. So Vikram, let me start off by sort of asking you,
Sure.
the pandemic has forced businesses to sort of rethink strategies and focus on working capital and overall liquidity to really be better positioned in, in a post-COVID economy. A lot of businesses that, we at InstaReM speak to talk about how they've switched up their supplier routines, they're managing payments to reduce their cost of borrowings and so on and so forth. In fact, just this morning, we were discussing about how a newspaper report in Singapore talks about the ability of local companies in Singapore to make timely payments, and that metric is sort of plunged to an 8-year low. What I really want you to talk to us about as a starting point is really the ground realities that you are seeing, and how is it in your experience that businesses are managing their cash flow in a period of crisis?
Sure. So first of all, thank you for inviting me. I hope everyone's keeping safe. This has been now over 6 months that a lot of us have been working from home, working away from our regular work. We've had a lot of lockdowns, but clearly, at least in Singapore, we're now seeing the numbers go down. The government's done a great job in terms of, keeping everybody safe, and hopefully from here the economy will revive. But it has been a trying period. A lot of people talk about a K-shaped recovery where you have some businesses, especially the businesses which have been online, which have been digital, where they're interacting with their customers over e-commerce. Those are the businesses which have done really well. But in other instances, a lot of the businesses which had physical presences, which are in more B2B space, serving other businesses which have not done well, they have been pretty badly impacted. And the study that you referenced, which I think has caught all our eyes, is just symptomatic of the broader picture that even though, businesses are coming back, but clearly working capital is going to be the big issue in the coming months. And we see this, as Visa, we have like a global reach. We are one of the largest payment networks in the world. We have, fortunately, a very strong digital business. So a lot of our clients are, our cardholders, merchants are able to make payments, accept payments, which are, digital, whether it's online using e-commerce or in the case of B2B payments using Moto and other, methods, channels. So that's been the saving grace. But clearly, working capital is coming through, and there's some ways in which you see this happening. For example, when you see consumer behavior, you have seen, and this has been widely reported, Visa has made statements on this, you've seen that debit card usage around the world has shot up. And in the United States, that was very clearly linked to the government, aid that was coming to individuals. But even in this part of the world, we have seen this. But clearly, that means that you're using ready cash rather than working capital in the business context, which is clearly a concern. That is a symptom. It's not the malaise. The malaise is more about how I think the question that a lot of our customers are facing, and I mean, when I say customers, actually they're all Adrian's and Sanjeev's customers who we interact with through them. What we see is that they have to plan and they have to manage liquidity. So managing liquidity, managing working capital, ensuring that you have a reliable supply chain, and ensuring you can serve your customers is clearly the agenda for a lot of our companies, a lot of the businesses in the years ahead or in the months ahead as well. Yeah.
Right. Thanks. Well, Adrian, I hope you can hear me because we lost you there for a bit and we were beginning
sorry,
to wonder.
I had a power outage and
oh,
I think
okay.
that was a trip.
Okay, super. So I did the introductions and, we had sort of just, we were getting opening comments from everybody and you possibly heard some parts of what Vikram was saying to us. I wanted to get your viewpoint as well, faced with unexpected cash flow issues, which I think now everybody sort of, knows about. Clubbed with this unprecedented COVID-induced economic uncertainty, we know that businesses are sort of scrambling to find resources to really stay afloat. Talk to us a little bit about how businesses can really turn to credit cards to try and mitigate some of these disruptions.
No, unfortunately, the situation has not changed until we get a vaccine. Although we are seeing some industries picking up tremendously and coming back to normal up to 2019 levels. Over the last months and so on, a lot of SMEs has been facing a lot of unprecedented cash flow issues, not just in the current situation, but also in the long term. And if you look at what's available in the market, the current business loans and overdraft are pegged at about 4 to 13%. This is not including administrative fees as well as annual fees. And more often than not, a lot of organizations out there overlook commercial cards as an opportunity to use as cash flow. This is pre-approved lines that the bank has given to an individual or an SME. And more often than not, it's an easy way for companies to get instant access to funds where they can use then the product, which is the commercial cards, for a purchase and enjoy the extended credit terms that is actually associated with the product. This will help greatly companies dealing with volatile cash and where they have seasonalities, demands in terms of their cycle to actually pay off suppliers or service rendered to their organization. And they can tap into a commercial cards with this pre-approved line that has been granted over by an FI to them for additional funds and to grow their business. Now, as we know in credit cards, the interest rate or the ANR is actually quite high. What I'm not trying to say is don't use credit cards as a revolving tool. But if you do, the banks will be more than happy because that's where the revenue drivers are. What I'm trying to say is use the extended credit interest-free days that we grant on commercial cards, which is up to a maximum of 55 days, and use that to actually tide over your business. Now, coupled with the fact that it comes in with rewards and rebates, it does have a significantly high way of you reducing your costs and enjoying benefits that comes with the product itself, whether the fees are paid by a buyer or it's over to a merchant that's already card accepting. Now, we know that for a fact that a lot of SMEs have large ticket size, and a lot of these large expenses and so on are recurring in nature. This is where a commercial card comes into play, where it will help a lot of SMEs in there. So essentially, it means that you can view your commercial card as a short-term financing option, and it provides access to cash similar to that of your microloans and overdraft. But way more convenient and faster to apply for than other financing options that you have in the market.
Okay, super. So I think, Sajeev, Adrian and Vikram have both laid the sort of foundation, but as we promised our audiences today, we do a sort of deep dive. And I think that's where, I would request you to really lay it out there for us on how it is that, players like InstaReM are sort of breaking open this whole paradigm on how you can get more out of the card beyond just say, payments for travel and entertainment.
Yeah, sure. Thanks, Tanya. And it's a pleasure to be on this webinar and speak to our audience. First of all, as both Vikram and Adrian said, working capital is definitely a need for customers. Use of card is an option that is available, but is not well utilized or well known about, or people not so much heard about it. Or even if they've heard about it, they haven't thought about it, that they can use it for broader B2B supplier payments. Because the traditional use of the card has always been for travel and entertainment. The reality is there is no travel happening right now, and even entertainment, after kind of Singapore kind of opened up slightly, is there, but it is at a very low key, and it is more at the personal level than at business level. So the card remains a viable option for use, or the use of the credit limit on that card remains a viable option for SMEs to look at how they can pay for expenses. So taking the cue from there, what I think it would be useful is to just share a few slides that kind of explain what I'm trying to get at for the audience. So let me make it a slide share. Okay, so just to talk about what is happening in this environment, and as was being referred by the panelist earlier, people are looking for working capital solutions. They're looking at how do I meet my supplier payments on a timely manner. Suppliers are looking to their customers to pay them on time as well, to keep their cost of working capital low on their balance sheet. There is a lot of these small payments that need to be done by the SMEs, like normal recurring payments, like I need to pay for utility, I need to pay for salary, I need to pay for my rent. So these are like recurring payments that are there, and they're not very large amounts, but definitely are important ingredients of how people do business on a daily basis. So payment of these kind of expenses remains an important aspect of how they look at managing their cash flow. In addition, once, and everybody hopes that this COVID will come to an end at some point in the near future, there will be a resurgence back into growing business, and at that time it would all be around how do I invest in growing my business. So I should have a cash pool that I have built over time that I can leverage. Or for some who are also into making payments cross-border, there is this whole piece around how do I keep my fees and cost low. So there are different drivers, and depending on what line of business you are as an SME, you would have some or all of these as an important part of how you do your mapping on a monthly basis of your cash flow. So if we look at this, the use of card is a viable option, obviously, because it allows you to pay for expenses. The fact that it is a credit card means that there is a line of credit that is available, which means it allows you to borrow. And if it allows you to borrow, it becomes in the same standing as a working capital loan or a short-term financing loan that you may take from a financial institution. So the opportunity, if one way to look at it, is that this line of credit that is already available is there for an SME or a client to use, uh, principally even more so in these times because there is no travel and entertainment happening, which is where I was saying was a traditional use of this card. So nearly 85 to 90% of the line of credit that a customer may still have on their credit card is lying unutilized. Now, the whole question is that if I want to use this for supplier payments, can I? One of the problems on this has been, or the traditional problem of using card for supplier payments has been the acceptance piece. And that has come in from the fact that a lot of the merchants or suppliers that customers use, they don't traditionally take credit card as a form of payment. Imagine a situation where you want to pay your rent to your landlord for your office, and you go and tell your landlord, I want to pay you by a credit card. It is very unlikely that the landlord will accept card because they have a tenancy agreement with you and you are supposed to pay rent to the landlord on a fixed day. Otherwise, the landlord can evict you. Similarly, you want to pay salary of your employees on a credit card. That is very difficult to do. But even if you go beyond these and start looking at broader payments to suppliers, a lot of them will currently not be accepting cards. One reason for that is that a lot of these suppliers currently have negotiated rates. They are giving you discounts. So they are unable to take an additional cost relating to card being a form of payment and therefore prefer you paying them through a normal bank transfer. So with this challenge, Visa and Citi and us, we work together to see how we can put some kind of a solution that would appeal to the customers and also will make this whole process very seamless. So what we have come up with is a product called BizPay, or what Visa calls BPSP, or Business Payment Solution Provider, which is basically a very simple way of enabling the use of a Visa corporate card issued by Citibank onto our platform, where the customer, once they have this card from Citibank, will come on the platform and then advise us how much, who's the beneficiary they want to pay. That means who's the supplier they want to pay and how much is the amount they want to pay. And then they simply give an instruction on our platform to debit their Citibank corporate card. And once they do that, we will convert that amount that they have asked for into a cash for payout to the beneficiary. So, and another simple way of explaining this is like you go to an ATM and you want to draw money from an ATM by putting in your card and your PIN number, and you punch in an amount and the machine gives you some money which you use. It's the same concept. So in a way, what the customer is doing is using their card on our platform to convert their credit limit into cash. The only big difference being that it is at a much cheaper price than going into an ATM and drawing money. So the concept wise, it's a very simple one. It's basically just the use of our platform for giving an instruction to debit your credit card issued by Citibank for a specific amount that you want to pay to your supplier, and then we debiting that account and converting that into a payout to the supplier. But the benefits that you enjoy on this very simple solution are immense. For example, if I were to look at some of the benefits from a saving standpoint, as Adrian was saying, you can get a cash flow of up to 55 days. That happens because there is a 30-day statement period and you get another 25 days terms for making a payment, which are absolutely interest-free. So if a supplier is giving 30-day payment terms to you and you get and the SME gets an additional 55 days on top, the total credit period becomes 85 days. And believe you me, it's absolutely interest-free. So there couldn't be a better way of looking at how do you want to manage your cash flow than using your own Citibank corporate card. On the other hand, if you are borrowing customer, which means if as an SME you are borrowing money from a bank to manage your working capital, there are several fees that are associated with borrowing. There is a processing fee, there is a term sheet under which the bank will ask you for details of who you want to pay. Even if it is unsecured, it will be much more expensive versus one that is secured. If it is secured, you have to provide a collateral. So those fees and charges are all eliminated because you don't need that on a corporate credit card solution, which is completely unsecured way of how to do it. And the best part is that if you use it on our platform, we will remit the money to your suppliers on the same day the card was used. So if you want to pay a supplier today and you authorize a transaction on your card today to me, I will make a payout to your supplier today itself. So that saves the supplier also the time to receive funds. And from the customer standpoint, who's the buyer, they are in a position to confirm to the supplier that the payment has been made today itself. The second thing is very important is and this is a billion-dollar question that will come up in everybody's mind, if I present my card on this platform, how secure it is. Now, the first thing is our company, or NIEM or InstaReM, as we are also known, is a company that is funded by blue chips. It's funded by Temasek funding arms, Vertex and Fullerton, and also by Visa amongst our principal investors. So we have a very good pedigree in terms of being Singapore headquartered and in a way, funded by the giants like Temasek, which gives us all the requisite credentials to enable this solution on our platform. Secondly, the platform itself is Pci Dss Compliant, so which are the gold industry standard around how a credit card transaction can be processed. And we also, because we are a fully regulated entity under MAS, we follow full KYC and AML controls. So there are a lot of security built around how a card can be processed in this platform, and I can assure you that all details relating to the card related transaction is fully securitized. From a flexibility standpoint, why I want to talk a little bit about this is that this solution does not involve the supplier at all. So in the traditional concept, when you want to use a card, you have to use the card with somebody who's willing to accept it. And I was talking about the fact that a lot of suppliers don't want to accept cards. So the fact that if they want to accept the card, then the supplier knows that you are paying them through a card. In this case, the supplier is not involved and therefore not transparent to funding of that payout has happened on the card. And there is full transaction details available for reconciliation. So from a finance accounts payable standpoint, the customer or the SME knows exactly who they have paid, how much they have paid, and what are the details of the payouts that they have done, so that reconciliation is easy. And because we are also a remittance provider, the flexibility we offer is that you can pay both domestic suppliers in Singapore, like for example, you want to pay rent or you want to use the card limit for salaries, those are domestic payments. But also if you want to make cross-border payments to beneficiaries that you may have in various countries overseas, we can do that as well. And we offer some very aggressive rates on the FX margin that can bring additional savings. Now, who can I pay? What can I pay? Well, there is no limit around who you can pay. You can pay everything and anything except for some of these banned categories that have been mentioned at the bottom of the slide. But other than that, this solution can be used for all kinds of payments. Having said that, in the market, typically when we work with SMEs, we see them using this solution for paying rent, for doing renovations, for paying salaries to their employees, insurance, taxes, things like subscriptions that they need to pay for, which are recurring expenses, or even some cases small dollar or even in some cases maybe large value dollar transactions, which they would prefer to put on a corporate card of Citi versus borrowing from the bank and trying to use that as a way of paying for these kind of recurring expenses. So in summary, I just wanted to kind of create a visual around why this solution is commercially viable. So as the first step, I said there is a credit period of 55 days available. 30 days is the normal statement period from Citibank, and 25 days after that is provided for you to make a payment. So up to 55 days is the maximum credit period that you can enjoy. 30 days in any case comes as invoice terms from the supplier. So the total maximum credit period can be 85 days, and it happens at zero interest. But I'm not even taking the invoice terms into account. I'm just talking about the card credit period of 55 days. Then cash flow savings, because how do we get 0.6%? Well, if say let's the minimum borrowing cost is around 4% for a small SME or a mid-sized SME, it can go up to 13% as Adrian was mentioning, but I'm just taking 4% as a cost of funds, and you are able to maximize that credit flow for 55 days. That translates into about 0.6% as a saving, just because you are extending the payment period by 55 days. Now, there is a fee that we charge, obviously, for doing this transaction. As I said, if you were to use an ATM solution to draw money, it is very expensive, something like 4 to 5% plus interest. Here, it is just a flat fee of 1%. There is no additional cost involved. There is no, interest charges, etc. The bank levies. There is not even an annual fee that they charge for the card. So there is a flat fee of 1%, which is for 55 days, which kind of translates to about 0.4%, 0.54% for a 30-day period. On top of that, because there is a 55-day period available, if you want, you can use this card limit to pay a supplier earlier than what their current payment terms are with customer. And as a result of that, try and negotiate an early payment discount, which can easily be anything between 0.5% to 1%. And this early payment discount opportunity, because everybody is looking for cash flow, and a supplier may also be interested in getting the cash earlier from you, can in a way help to offset this cost that of 1%. And on top of that, the icing on the cake, or the great news, is that on top of that, the use of the card on this platform also offers from Citibank, which is a benefit that comes directly from Citibank and not from us, is the Citi Rewards Thank You Points, which can be converted then into multiple amount of benefits, whether it is in form of taking some e-vouchers and redeeming them for various kinds of offers that Citi has, including petrol or grocery or even Apple products, which I find very interesting, or for air miles. Once travel opens, and you can convert these into 10 different airline programs, frequent flyer programs, and leverage them for business travel. But given the fact that travel is a little distance away, the points can still be used for a lot of other stuff, which can bring commercial benefit back to the company. Or the SME can simply use this as a program to reward their employees for their contribution in a very difficult environment, and run an employee program by giving them vouchers that the employees can use. So there are different ways of how this can be commercially monetized. The most important messaging that I wanted to leave everybody with is that the solution is viable. The fees is low. It is not the traditional card fees that is charged, or what people think that I'll be out of pocket by a humongous 2.5%, 3%. No. It's very, very cost effective, pays for itself for the benefit that it brings, and most importantly, very easy to use. The moment you register on our platform and get a Citibank card issued by Visa, all you have to do is just tell us who you want to pay, and we pay this beneficiary the very same day, which makes us very unique and differentiated in the marketplace. So I hope I was able to, Tanya, share a little bit about how this solution is and what are the benefits that it brings to our clients.
Right. Sanjeev, thank you so much for that exhaustive walkthrough. While you catch your breath at this point, I'm just going to sort of urge the audience members to leave behind any questions that they might have. Sanjeev, I do have a few questions that have come on email, but I'm just going to wait to let also, those who sort of logged in live to leave behind their questions. In the meantime, Vikram, I'm going to move on to you. And I suppose it may sound repetitive, but nonetheless, I kind of want a point of view from a business's side of things. Sanjeev kind of walked us through a whole bunch of advantages of tapping this credit line on a corporate credit card and really turning it into a funding source for your business. But again, from the folks that you sort of speak to on a daily basis, what are the motivations for a business to actually kind of turn to a solution like this?
So I guess one of the big motivations for a business is the fact that they have to react very fast. The opportunities which are there in the market today, especially given the downturn which has happened and now the revival which is underway, businesses need to react to opportunities. As I think was mentioned by all the people in the panel, the existing processes by which you can get a loan, whether it's from a bank or somewhere else, are usually quite cumbersome and maybe involving a lot of paper. You have a line of credit which is sitting in your wallet, you react with the business, and then you have some opportunity to catch you can catch, let us say, a good discount that your supplier may be offering, because the supplier may be short of funds at that point in time, or there might be an investment opportunity that you're going after. So that I think is the most advantageous part of this process, is that you are given the flexibility. In life, all of us need options, right? If you're stuck with one thing, then it's clearly not the most optimal solution. This solution, what Sanjeev has outlined in great detail and in amazing clarity, I think that provides you with that option. That if you are now today seeing business come back, you are seeing demand come back, you have to hire new employees or you have to rehire your employees back. That's where the card can really play a role, and working with BizPay can be very useful.
Right. Adrian, let me also ask you, as we've sort of clearly been detailing, the use of a corporate credit card to make B2B payments is gaining traction, something that you sort of alluded to as well. On Citi's part, what is it that you folks are doing to sort of, promote it? Again, I have some questions around, let's say I don't have a corporate credit card. How easy is it going to be for me to get one in this environment?
Well, it's not difficult to apply for commercial cards. Leave your name at the bottom itself. You'll get a lot of people to actually call you up within 24 hours to actually walk you through a process which is non-cumbersome. All you need to do is just give me a 2 years statement of financials. If you are an SME and you're a sole proprietor, you can give me your ITNA, and it can be processed within a couple of days, literally, to apply for a commercial card. But let me try and take you back to your earlier question, which is what Citi is actually doing with a lot of B2B partners. I think the magical question came up about 2-3 years back when fintech partners was actually entering into Singapore market. I think at that time, most banks were actually eyeing fintech partners with suspicion and concern, and saying, what are they trying to do to come into a space where the FIs was already playing in and actually providing enough financial services to the broader group of companies or individuals out there. I think, but over time, we have seen that major change in stance of providing traditional financial services like even credit cards or loans and so on, and it has since evolved. And today, scenario itself is you can see a lot of financial institutions no longer looking at fintech partners as a threat and an intruder, but instead working in collaboration with them to actually grow market sizing and offer increased engagement to their clients out there. Citi has since partnered with Niam, and this is a classical example of what we're trying to do in the market to promote partnerships with Niam to look at what we call exponential growth in the underserved segments. So as an example, Citi has been working together with Visa and partners out there to try and facilitate what we call cross-border payments. to suppliers that buyer usually buys from. And Vikram can attest to it. We had talked about this for years, and we never ever had a breakthrough. Then came Nyan, or initially your parent company's InstaReM, that is the engine to actually facilitate cross-border payments. And we have seen a huge success in that area. Now, one of the things that I would say to you, the greatest value add that we can do in any partnerships, and this is what we are trying to promote through our sales manager as well as our relationship manager, besides other EDMs, webinars, above the line medias and so on, to actually ask customer, if you have a question, please reach out to us. We'll be more than happy, is to form a very solid structure of improvement towards using innovation as a tool. Okay, gone are the days where it's a paper trail. It's so difficult for you. Think about the way we are actually operating currently now due to COVID-19. And this quickly improves customer experience, which is what we're looking at, which is the digitization and evolving towards a new age. And this is how we're going to shape the future together with our partners in the payment industry itself.
Okay, super. Sajid, let me ask you a bunch of questions that I have here. So there's a question around, what is the merchant discount rate or MDR that will apply for these transactions? I know you touched upon it, and you talked about how roughly it would be about 0.4% per transaction. But there's also a question here, which I think ties up to the point that Adrian was making about cross-border fees and FX margins. Could you, maybe walk the audience through that bit, a little bit?
Okay, so thanks. So first of all, let me answer about the transaction fee. There is a transaction fee. Obviously, we call it a transaction fee. We don't call it an MDR, because the traditional concept of the MDR is that MDR is charged when you are making a payment directly to the supplier who is being set up for card acceptance. And this whole solution is designed around addressing this problem of acceptance from a B2B standpoint, not so much in the consumer space or retail space, where today in Singapore, we have very good card acceptance. Wherever you go, you can use your credit card to make payments by far and large. But when we talk about B2B payments, there is this whole issue about acceptance, because the suppliers are not set up for direct card acceptance. And if you talk about rent, payroll, which are typical business expenses that any company has on a monthly basis, even if the business is low, they still have to pay rent and salary. For these kind of expenses, there is no card acceptance at all. So what we are offering, therefore, is a transaction fee model under which the card can be used on our platform first, and then we make a payment to the supplier like a normal bank transfer. And that is why in my presentation, I was talking about the fact that the supplier is not even transparent to the fact that card has been used as a funding source. Now, this transaction fee that we charge is around 1%, which is what is all inclusive of any kind of associated charges. So there is nothing else that is payable on top of this 1%, which is what we are charging for Citibank corporate card issued on the Visa platform. And that is the fee the customer would end up having to pay. But the other part of that is FX. And if the customer is wanting to make a payment to somebody who's based overseas and says, please convert my Singapore dollars that you have charged to my credit card of Citibank and pay supplier out in US dollars, or pay my supplier in ringgits or Thai bahts or any other currency that they want to pay. For that, there is, of course, an additional fee that we will charge. However, if you look at an InstaReM solution on cross-border payment, I can tell you that our solution is very, very competitive to a typical FX margin that you would be paying or a customer would be paying if they are going out in the market and trying other vendors. And the beauty of this solution is that what we do is that we give you a bundled pricing. So what we will do is we will look at who are the beneficiaries you want to pay and in what currency you want to pay. And we will bundle that pricing together to give you one pricing that would include the fee, the transaction fee for using the platform, as well as the FX margin. And that varies depending on which currencies you are intending to pay. So on a one-to-one basis, when we have a discussion to set up the client, we can discuss that and arrive at a pricing that is acceptable to the customer and us and Citibank.
Right. There's another question on whether both the buyer and the supplier need to be onboarded.
No. So that is where I am repeating myself, but I want to break this paradigm that card can only be used if the supplier is accepting the card. That has always been the traditional problem, because a lot of customers have found it very difficult to use card for business payments because their suppliers don't accept it. This is exactly why this solution is so innovative, because what it does is it removes the need for the supplier to be card accepting. All you have to do is use the card with us, and then your supplier gets paid like a normal bank transfer. So your supplier is not even involved in the transaction. They don't even know that you have used card as a way to fund the payment to them. On the contrary, what the customer can do is negotiate an early payment discount with the supplier, because now they are using the card credit period of 55 days and the credit line that is available on their card to make a payment. So what they can tell the supplier is that, okay, after you invoice me in 30 days, my terms were to pay you in 30 days, but now I want to pay you in 10 days or 15 days. So for that 10 or 15-day early payment, I want to charge you an early payment discount. The supplier doesn't know why you are suddenly paying them early, but is happy to give you a discount because they are also interested in getting the money faster. So you are turning the same situation on its different head and actually asking for an early payment discount rather than paying the supplier through a normal payment term that you may have negotiated. And that's why this solution is so very innovative and different from the traditional methods of how people have been paid before.
Right, Sanjeev, I'm going to keep it with you. There's one more question about what is the resolution mechanism that will be adopted should there be a case of a buyer-seller dispute?
So first of all, this kind of a solution is used only when the buyer has approved a particular payment to be done. Because the buyer is saying, I'm wanting to use this solution from a working capital cash flow standpoint. The resolution process of a particular goods or service not meeting my standards is something that sits outside of this platform, because that is a bilateral between the buyer and the supplier. Buyer is now saying, I'm ready to make a payment because I have done my reconciliation. I have gone through my accounting process of approving this payment, typically through a maker checker process. And now I want to disburse the payment. It's at the time of disbursement of the payment that the funding solution comes into the picture, where the Citibank corporate credit card is then being used as a funding solution for disbursing the payment through our platform, which we will execute based on the buyer's advice or instruction. So the dispute process should not arise because there is no dispute. There is no involvement of the supplier in this whole process.
Right. Thank you. Thanks for that, Sanjeev. At this point, again, I'm going to we have another 10 minutes left. So if anyone in the audience has any questions, any doubts, please leave them for us. I noticed Sally had said something, but I think Adrian's already responded saying that someone from his team is going to come back to her. Should you have any more questions around pricing and etc., please just leave them here for us. Vikram, I'm again going to turn to you to get your thoughts on just again in your experience, how effective has this solution proven to be, especially for small businesses? It would really help if you can maybe give us some instances and illustrate with use cases.
Sure, absolutely. I think this is, as Adrian was mentioning, and he's been my partner in crime for over 10 years. This has been something that we've been kind of working on. It's come to a process that we now have the whole system laid out. We've now tried and tested this, at least for Visa. It's working for us in 7 or 8 markets around the world. Very popular. And in the last couple of months, we've seen the usage just shoot up. And a reason for that is obviously, businesses working capital becomes so important. But one other thing that, which is probably impacting the usage positively is the fact that people are not working from the offices, right? So today, one of the things is that you have to make payments to your suppliers. You have to make payments to, to others, your rent, as Sanjeev was mentioning. But you're not in the office. Your regular processes aren't running. You're running a small, medium, or a large business. You have to do everything from a screen, right? And that's where the screen that BizPay provides becomes so useful. The other aspect of this is that every transaction gets reconciled. So every time you are ensuring you're asking NIAM to initiate a payment for you, you know exactly which invoices got paid. Your supplier knows which invoices got paid. So what we have seen in the past as being the big issues around data reconciliation and the constant queries and not being able to close books in time, that has got reduced quite dramatically. So payment benefits, absolutely. Benefits around convenience, working from home, ensuring that your employees are able to do it, do the transactions as required, not having to spend time doing reconciliation. And of course, in the post-COVID world, digital is going to be the key. And so this is as digital as it gets. And I think, one of the points around cross-border payments as well, you don't have to do the copious paperwork and procedures that you typically have to do for cross-border payments. NIAM has made the process extremely efficient and easy, which is a big benefit when you have a lot of bills to pay and not enough time in the day.
Right. There's a question that's come from Cherry Rose. I'm not sure if the other, attendees can see this question. So Adrian, I'm just going to pose this to you. Cherry is asking, do we have any credit limit? If yes, what are the factors that are involved in deciding the credit limit for a company?
Well, typically what we look at is if you're a private limited company, we need 2 years financials. If you're a sole proprietor, we could use your individual tax assessment, ITNA, to determine. You can request a line that you require, and we will assess your financials and grant you that limit. Alternatively, you can actually leave it blank, and for Citi to actually do their credit assessment and come back to you with a proposed limit that we can grant you based on what we are seeing in your financials. Hope that answers your questions.
Thank you, Adrian. Sanjeev, there's another question here, and this one's really sort of asking that how do you ensure that the customer data is protected?
Yeah, as I was saying, the Pci Dss Compliant platform is the industry gold standard around how we protect the customer information and the use of the card and the details of the card. All transactions, when they are processed, the card numbers are masked. On top of that, when you log in, when a customer is logging into the platform, there is a dynamic password that is sent to the authorized user, whether on his email or mobile phone. When the transaction is being processed, there is also a one-time password because these transactions are 3D secure. So that is again a layer of security that we provide to ensure that the transaction meets full industry standards as far as processing is concerned. And then we protect the data regarding the card details that are stored on our platform through our Pci Dss compliance to gold industry standards. All transactions are encrypted and card transaction details are tokenized and stored in our platform.
Thank you for that, Sanjeev. Again, we have about 6 odd minutes, so I will urge the audience one more time to go ahead and don't hesitate, ask us whatever questions that you have. And I'm just going to take then sort of closing comments from everybody. And Vikram, I'm going to start with you, and this question sort of remains the same. What would your advice sort of be for small businesses that are trying to regain footing in this new normal? Vikram, we can start with you. I'm afraid
apologies, I was on mute. And
yeah.
I was on mute. I'm so sorry. Yeah. Yes. No, I think my advice is as you look at the term ahead, the period ahead, make sure that you pay attention to that you have enough capital to grow. Growth opportunities will come back. We've been through a very tough period, but clearly once the vaccine comes and given the great performance of the Singapore government in terms of managing now everybody's health, we are going to see the demand coming back, and you have to be prepared for that. So my advice would be prepared, keep your options open, take advantage of all the great solutions that Citibank and NIAM and everyone else is providing you. And the future will be back. We are in a very dynamic part of the world, and there is a lot of growth ahead for all of us.
Great. Okay, Sanjeev, before I sort of take it to Adrian, there's another question that's come from Prem. It says, can we make payments to vendors without a Visa terminal, or must they also be on the same platform? Can we use this to pay vendors as though it is a bank transfer?
Answer is yes, they don't need to be on this platform. Vendors will get paid like a normal bank transfer. As I said, vendors are not even transparent to the fact that a Visa card is being used by the buyer, because the use of the card stops the moment it is used on our platform. Beyond this, the payments will be sent by NIAM to the beneficiary that the customer has nominated to us through a normal bank transfer rails.
Right, Sanjeev, I don't know where Prem is from, but I think also it would be valuable for the audience to know, what is our roadmap in terms of rolling out this solution? Where is it sort of currently present, and where can we expect it to be in, say, the next couple of months?
So we have rolled out this solution in multiple markets. It's available at the moment in Singapore, Australia, Hong Kong as 3 countries. We have plans to roll this in Malaysia, and then going forward into India, Europe, US, and Indonesia as the next phase of markets where this would be available. But at the moment, as we speak, the program is already available in 3 countries, which is in Singapore, Australia, and Hong Kong.
Okay, great. I hope that answers, some of our attendees' questions. Adrian, I'm going to then sort of, take it to you to talk about, the point that Vikram was also making about advice for small businesses to sort of regain footing in this new normal.
Seek assistance. That's the key word. I mean, I like questions actually being prompted on the screen itself. If you don't seek assistance, you're not going to get the answers you're looking for. I think a lot of SMEs, if I see over a period of time, they're hesitant to actually engage with banks. One, because they don't trust the banks, and they always think that the banks is out there to make money. We don't bite, trust me. The likes of Visa and NIAM out there together with Citi, we're trying to help and conquer a space that traditionally was underserved. My personal advice is you need to have 4 key principles in order to be successful. One is you need to know your desired outcome. And once you know your desired outcome, know what inspires you or your organization. And the most important thing is act on it. If there is no action, it's just plain Jane, no action, talk only. You need to act on what you are looking at. And then look at the results and adapt your approach. So if it doesn't work and your strategy is wrong the first time, try again. That's my personal advice.
Well, why just small businesses? I think that would hold true for pretty much anyone listening.
All of
to
us,
this.
yeah, exactly. Absolutely.
But Adrian, thanks for that. Closing, yes, Vikram, did you want to say something?
No, I really want to echo what Adrian said, is that you can try it out for some of your suppliers, right? You don't have to adopt the whole solution wholeheartedly right up front. There is no commitment in terms of what you can put on. But once you try it on, what we see is that once the corporates start using this, then they progress very fast. The comfort comes in. So don't get dissuaded by the fact that it's Citibank and NIAM and Visa. We are all there to make this happen.
Yes, thank you. Sanjeev, closing comments from you, really, again, some advice for small businesses. And again, Prem here has another question. if you can sort of just also tackle that as we, you round off the discussion.
Yeah, I saw the question from Prem. Yes,
Yeah.
it is 1% net, which is the cost. But my last few words is only this, that sometimes one has to try something which is innovative to actually realize that while it may appear as a simple idea, but it is a tremendous one. It can bring about a complete change in the way you look at your cost on managing working capital. I've been in industry along with Vikram and Adrian for a long time. And I can tell you that for many years, when I was part of the commercial card business in many blue chips, I always used to wonder how easy it would be if we could convert all these supplier payments on the card, and how difficult it was for me to make it happen because the suppliers won't accept it. And it is now that we have a solution which Visa has put together, with an investment in this whole concept around how to make it cost effective for businesses to actually manage supplier payments using this platform. And that's what is super exciting. And it's just a matter of taking a decision to try it and then see, and there are no commitments in any case, as was being talked before.
Great. Thank you so much, all three of you. I hope the audience, found this sort of engaging. And like we said, we promised you actionable insights. So you heard, straight from our veterans who, really payments ninjas, if you like. So if you have any questions, please feel free to write to us. We can sort of pass it along to Visa, Citi. Should you have any questions, should you want a copy of, the presentation that Sanjeev made, we're happy to share that with you as well. So you know where to reach us. Thank you so much. Before we sort of just end this, because we have another minute, Sanjeev, Desmond is asking, may I ask if it's 1% across all countries? Looks like everyone really wants to get the cost right.
No, it is not. In Singapore, it is 1%. But, for different countries, there are other factors involved. For example, there could be regulation involved from the central bank of that country. There could also be interest rates that could vary across geographies. So the pricing that is, kind of charged is a derivative of several factors. But the pricing that I was talking about is specifically for the use of the Singapore issued Citibank Visa corporate card. And that's at 1%.
Can I add on? But if Desmond, you're asking, is it 1%? Depending on the markets, and I think Sanjeev has addressed that. But don't forget that there's the kickback that Citi would give you on your commercial cards, which is either in the form of a rewards or a rebate. That actually brings down that cost, basically. So there's a lot of multitude ways that we can actually do and help our clients out there. But you need to seek the assistance, basically, from our partners, Niam. And Citi and Visa is more than happy to engage you. No question, it is a stupid question. I think what we want is to actually find a new way to actually tackle the market. And your questions are usually the same. So feel free to engage us.
Yeah, it seems like just when I was wrapping up the discussion, there are a whole bunch of questions coming. So I'm going to take another question here. Again, Prem asks, can we use this to make payments to an individual rather than a company in Singapore? Sanjeev?
From a payout standpoint, NIEM allows you to make a payment to an individual as well. So for example, you want to pay salary and you say to NIEM, please charge my card for an X amount and please remit the salary, like a payout to this beneficiary as a salary payout. Yes, we can. So technically we can make a payment for businesses. That's what principally this is used for making B2B payments to another business. But if there's a specific use case where it needs to be paid to an individual, we can do so as well.
Okay, thank you. What I'm going to do is I'm also just going to leave behind my email address here. So you can, send us any questions. And like I said, we're happy to pass them along to Citi or Visa and make sure that, we answer them. I think so far we've managed to answer all the questions. Okay, great. So I think we are 2 minutes, beyond time. So I'm going to thank our panelists for the evening, and a big shout out to everybody who also attended and joined in. Thank you so much. It was a pleasure talking to all of you. Thanks.
No, thank you so much for inviting us.
Thank you.
Thank you.
Nice.
Thank you. Bye.
Bye.